traders. We're not discretionary. Discretionary traders down here. This guy here bases his decisions on, and we'll just mark that up on the chart, gut feeling and experience. Now, I don't know about you, but every time I try and take a trade on gut feeling, it doesn't work out too well, because I'm not a very good gut feeling trader. Let's get a vote. Who's a good gut feeling trader? When I ask this question, well, there's normally a few more people, but it's not really a good way to be trading the market. It's just because your gut feeling has too much of your emotion attached to it. So we want to separate ourselves. When we spoke today about making sure that when we trade, we don't get into a situation where we're just basically running our trades off emotion. We've got to make sure that Karen and I spoke about it today, we want to make sure that we're trading off exactly what it is that we know is true, and not just our beliefs in the market, but based on exactly stats and more stats. So it has to be based on stats. So if we go up to mechanical trading, we can say here that the biggest thing about this is stats. And guys, Tim and Mel, we talked about this when we talked about our win rate, our positive expectancy. We wanted to make sure that our reward to risk was great. So with our stats, we want to have our goal is to have a great reward to risk. That's really one of our primary goals, isn't it? What did we think about our win rate? It wasn't as important, was it? So a win rate wasn't that important, but our reward to risk has to be really, really good, because we need to be winning twice, 2, 3, 4, 8 times more than we lose. So that's our goal as traders. Now, I think I've just got a timeout there. Let me just now guys, what I'll do is I've got a timeout there. I'll copy this tonight's session with the video and the map into your own maps, and you'll be able to access this. And this is pretty much how we're gonna do our training, because at least we've got a little bit of, it's a bit more interactive. That's a good way of kind of fleshing out the ideas of trading. It puts it into perspective. If you're happy to continue doing it that way, I mean, I can show you charts, which I will. I'll refer back to charts. But at least this, we can see the links between where we start as trading and where we finish, so we can see how it all pieces together. So just give me a minute. It's just booted me out for some reason. Might be it's just timed me out, so I'll be back into it in a second. Now, there's one thing that we haven't kind of covered here yet, is we haven't covered the speculators and the hedges. Now remember, that was one thing we talked about today. We talked about what type of trader do we have in the market. Are we speculators or hedges? And I've just uploaded a new module on speculators and hedges to the map. So what we want to do is kind of get an idea of where speculators and hedges fit in this whole scenario. So we'll do that in a second once we get time back in. While we're waiting for this to reboot itself and reconfigure, we will jump to the charts and have a look at what's happening today. As you can see, a lot of volatility today in the market. There's a massive amount of movement, and we're seeing that reflected in the markets at the moment. We talked about looking at the different markets that are running at the moment, and you'll see that crude here is just on a bit of a tear down. It's pushed back up. Now, when we first looked at crude today, we actually looked at it back here, and it had run, or if you guys remember, it had run 2.16 points, $2.16. So it's had a massive drop. And basically we're using, I'll just move this out so we can see it a bit better. We'll open it up a little bit and we'll just push this up as well. So what we've got here is we've got the indicators. We've got a volume. So this is basically just a very, very basic bar chart, a price chart. So these are just price bars. Now the indicators I've got on the chart, we've got volume, which is this one here. So this indicator in the middle is volume. So let's mark this up on our chart. Now remember, from our analysis that we looked at earlier, that's one of the keys to our trading. We've got price, we've got volume. We're going to talk about open interest next week, and we need to talk about size as well, and that's professionals, the professionals or the amateurs. So we did a little bit of work on that last week, but we'll cover it again tonight, because we're just going to keep going over and over this, because this is what pretty much we're going to be looking at trading as we move forward. So here's our volume chart. Now volume really is a clue for us to determine whether we're, how much momentum or how much power or how much movement we've got in the market. So if we find that we're basically losing volume on our buy or sell side, and we're long or short. So for example, if we're in this trade here and price is moving up, if we see this big red line here on the chart, if we see something like that show up on our chart on volume, that's basically telling us that the buyers here are starting to run out of momentum. They're starting to run out of that's basically a volume spike. They're starting to run out of momentum, and they're losing their ability to move this market up. So what we should be looking for as traders, because remember, we're day traders, we're speculators, we should be looking for this market to top out and potentially move in the opposite direction. So we're looking for a clue, an idea of where to get in and to sell this market, because remember that once we get a couple of clues, like we've got price, and we're also getting a signal down here that's saying, right, well, if you get a red dot, that's basically telling you that this market is ready for a potential sell setup. So what we need to do is determine